JD Frost, and welcome to the Accountability Show. Thank you so much for tuning in. Please make sure that you turn on the notifications so you know when every new episode is dropped. And also like, share, subscribe to this channel. I would really, really appreciate it. So in the Accountability Show, we are talking about 12 steps to lay a firm accounting foundation into your business. And so there's so many different things that are part of these steps. And what we're trying to do is break down each one of these steps into the what, why, how, and then we actually provide you with an example that you can use and a fundamental example that you can use in your business. So we've talked about the last couple weeks about tax planning. Now, there's specific ways that we apply specific parts of the tax code to our tax plans for our business. There's a strategy that we follow. And one thing that I figured out when I was thinking about how do I grow and scale this part of our business is I had to lay out the different ways that I analyze a person's tax situation and the different ways that I look at it. And I had to put it into some kind of systematic fashion, systematic form that I could teach to other people. And not that, that there's only one way to do this, but this is what I have found that almost every single client that we come across, there are essentially 5 pillars that allow us to master the tax strategy for that client. So we call them the 5 pillars of mastering tax strategy. That's what it is. That's why we call it that, because it's basically 5 subjects, 5 pillars that will affect just about any business there is. And if we apply these 5 pillars, we will find a way to save you money on your taxes unless you have a CPA that is just unbelievable. But almost every single tax return that we look at, if I look at a prior year return, I can pinpoint one of these 5 pillars and how it will save money for you on your taxes. So what are these 5 pillars? The first pillar is tax planning. The past few episodes, 4 episodes that we had, is on tax planning. There are 3 reasons why we do tax planning. And if you've watched all these episodes, you're going to hear me repeat this over and over and over again, but I have to continue to repeat it because it usually takes you 7 times to hear something before you actually hear it and act on it. So the first reason why we do tax planning is we want to avoid penalties and interest. You have to calculate what's called the safe harbor calculation. The IRS requires you to pay in 110% of your prior year tax or 90% of your current year tax before January 15th the following year in order to avoid penalties and interest. The second reason we do tax planning is that you have to know what your tax is going to be. KNOW. You got to know what your tax liability is going to be so you're not surprised, so that you can plan. Tax planning is basically like preparing a budget for your taxes. The third reason why we do tax planning is we want to minimize your tax liability as much as possible, and that's where the 5 pillars of mastering tax strategy come in. So you have to prepare a tax plan in order to apply one of these pillars. Almost every client that we come across that isn't our client or a recurring client, they have never done tax planning before. I don't know what it is, but they've never done it before. They've never even thought about it, never even heard about it. And so tax planning is the first pillar. Second pillar is entity formation. Depending on if you're a partnership, a sole proprietorship, a single member LLC, a limited partnership, an S Corp, or a C Corp, that entity structure is going to affect your taxes. All those entities are taxed differently, and the way that those entities are intertwined together, if you own multiple businesses, will depend on whether you pay more tax than you have to, or if you pay as little amount in tax as you have to. So entity structuring is the second pillar of mastering tax strategy. The third pillar of mastering tax strategy is the tax method of accounting. This is whether you're the accrual basis, the cash basis, completed contract, uncompleted contract. There are multiple methods of accounting for tax purposes that the IRS makes you elect. There's a certain election that you make when you start your business, and that is the election, is the method of accounting in which you calculate your taxes. Well, depending on the method of accounting which you calculate your taxes, depends on how you decide to treat transactions, make decisions based on transactions throughout the whole year in order to reduce your taxes as much as possible. It allows you to be able to create a deferral from year to year, and you can defer as much as you want to, depending on the tax method of accounting that you use. This is all within the tax code. The fourth pillar of mastering tax strategy is what we call specialty industry tax credits and deductions. There are specialty industry tax credits and deductions for every single industry and taxpayer, depending on their income level, depending on their taxable income level. There are specialty tax credits that are available. There's special deductions that are available. Those can be R&D tax credits, conservation easements, could be a cost segregation study, could be a health insurance tax credit deduction. There are so many that apply to your specific situation, and that's why in the Croft tax system, we have specific ways to communicate with the client so that we understand your specific situation and we apply those specialty tax credits and deductions to your business and to your tax return. That's the fourth pillar. The fifth pillar is captive insurance companies. Captive insurance companies are a special type of company that ultra wealthy individuals can form in order to reduce their tax rate from 39% or 37% to 20%. So a 17% tax savings on their earnings. Captive insurance companies are very, very powerful, and we could have a whole series of episodes just on that one pillar. But today we're talking about what are the 5 pillars of mastering tax strategy. Number 1, tax planning. Number 2, entity structuring. Number 3, tax method of accounting. Number 4, specialty industry tax credits and deductions. And number 5, captive insurance companies. In the following episodes, we'll be going into more of the why of each one of these 5 pillars and why they can be applied to your specific situation. So keep continuing to stay tuned in to the Accountability Show so that you can learn more about the 5 pillars of mastering tax strategy and truly understand that there's a method to all this madness called the tax code. Thank you so much for tuning in to the Accountability Show. Like, share, subscribe. Go to the YouTube channel for Croft as well. I just want to throw that out there. To go to Croft and check out the Rhino Zone. It's a new thing coming, and it's about me and Paul Croft, and I want you to check it out as well. Thanks for tuning in.